Welcome everyone to this meeting of Cambridgeshire County Council's Shareholder Subcommittee. The County Council allows filming and photography at its public meetings, so please feel free to take pictures and use social media during the meeting. Can I ask, though, that everyone present turns their mobile phones to silent or vibrate whilst the meeting is taking place? Please be aware that this meeting is being live streamed and that a recording of the meeting will be available to view on the County Council's website. There is no fire alarm test scheduled for today, so if the alarm sounds, I will adjourn the meeting and we will leave via the side doors and use the fire escape next to the kitchen there to make our way to the assembly point in the car park. Right, so we come to agenda item number 1, which is apologies for absence and declarations of interest.
Thank you, Chair. I've received apologies from Councillor Bowden and Councillor Bywater is substituting, and apologies from Councillor Murphy and Councillor Wilson is substituting.
Thank you. Does any member wish to declare any disclosable pecuniary interest or non-statutory disclosable interest? Councillor Hawthorne.
Kendall Court is in my division, which is one of this land properties.
I should also say that Adava Park is in my division as well. Okay. Right, well, then we move on to item 2, which is the minutes. We're being asked to approve the minutes of the Shareholder Subcommittee on the 17th of June as an accurate record. If any member does not agree, can you raise your hand now? Okay, so I see no objections, and so we will take that as carried unanimously. Right, moving on to item 3. Do we have any public questions?
No, Chair, no public questions. Sorry, there is an action log. I don't know if you want to draw members' attention to that as part of the minutes.
Okay, yep. Shall we note the action log then, please? Anyone? Okay. Any comments on the action log? Okay, thank you very much. So now we move to we've received no public questions or petitions, so now we move to item 4, which is the This Land business plan. I'd like to welcome from This Land Board Chair Barbara Richardson and Interim Chief Executive Rob Williams. Thank you very much for coming. We really appreciate it. They are attending to answer questions of clarity in both public and private sessions, so we'll leave the meetings after these questions. I would also like to welcome Oliver Haunch and Sam Dean, advisors from Grant Thornton, and Becky Francis, development surveyor in the Council's property assets team, who will be joining us online. Can I invite the Executive Director of Finance and Resources and the Service Director, Finance and Procurement, to introduce this item?
Thank you, Chair. And as noted, we have representatives from This Land, as well as our officer and external advisors on hand for those clarity. But if I may just introduce the report a little bit longer than I would normally take, because I appreciate that whilst this matter has been to the Shareholders Subcommittee before, a number of members are new to this committee since that was earlier taken. So the subcommittee in January considered a draft business plan from the company. The view of the subcommittee on recommendations from officers and advisors was that the business plan contained an element of risk which didn't give the level of assurance needed around its continued security in terms of the council's loan to the company. And as a result, the subcommittee rejected the business plan and gave clear steer in terms of what should come back. There was only a limited number of weeks before and between that happening. As a result, the company worked very hard to produce an outline business plan with cash flow positions, which pertained a number of site-by-site analysis, which were deemed commercially sensitive, given the level of detail that was presented at that case as differs from today. What that cash flow did enable us to do was to then have a consideration through the Strategy, Resources and Performance Committee about the ability to restructure the loan to gain security over both the council's assets and valuation of that in terms of the security of the loan, as well as for the company in terms of its continued trading position, something that is quite common and practice within the commercial sector, and something we did seek advice upon in terms of taking that decision and provided that to committee. One of the requests, though, of the February shareholder subcommittee was that the detailed business plan both come before this subcommittee, but also there to be debate in public forum, and that's why today's agenda addresses that. If I just focus in on also a few of the lessons that have been learnt from as far back as the Avison Young report, to the KPMG Value for Money report that the Audit and Accounts Committee considered of February of this year. What I'm hoping that councillors will see is there has been an awful lot of diligence by both officers and through external advisors of the business plan, and we can test that through the questioning. Included within that, there is a number of points of scenario testing. That was something particularly flagged up by Avison Young, and you'll see in your pack, both from a public as well as a confidential, there is scenario testing throughout a site-by-site analysis. Officers have carried out significant work around the cash flow focus, therefore, and that site-by-site focus, both in terms of costs and valuations, with the support of advisors, but also in terms of challenging our external advisors. And that ranges from valuers, financial and accounting. From officers' perspective, as set out in the report, I can say that we are supportive, therefore, of the business plan as is laid before the subcommittee today. We're pleased to say that the level of detail that has been provided by the company meets the ask of councillors in terms of the direction and is far greater than has ever been considered by the council before in any of its former guises in terms of meetings. However, clearly what that does mean is we have a number of confidential pages. We are conscious that we have a company here that operates in a commercial world. That's both in terms of its costs and its sales, and to give competitors and buyers that information would disadvantage considerably the commercial position of the company, and therefore, in effect, undermines the value of the assets, or could undermine the value of the assets. So we have tried to keep as much of the high level position to enable a public debate, but there may be need for councillors, if you wish to consider a site-by-site analysis, for us to answer those questions in confidential session. So if we do feel that is the case, we may need to identify that in our responses, and we will do so. But hopefully what this does now do is it sets a very clear benchmark and line in the sand for this subcommittee to monitor the delivery and the performance of the business plan that's presented to you, if it is supported, going forward on a quarterly basis. This is something that the council has not done robustly in the past, and it's something identified and something corrected and something that is scheduled for this company and will follow through from the This Land board's governance structure in terms of reporting here. As I say, we do have the company other advisors here to assist in responding to questions from councillors. And I would finish by noting that the report that is set out from page 13 has the recommendations at page 13 and 14, but in particular decisions around certain plots of land in recommendations C and D that will need to be considered through questioning as well. One final point, and I'd like to thank Councillor Wilson for identifying this. Throughout our operations with the company, it was essential that we maintained working drafts as it was kicking back and forward. Therefore, when we uploaded the public report, we did so with the public report being exactly that, in the public domain. But I draw councillors' attention to page 32 of the public pack, which in error at the bottom of the page does note the word strictly private and confidential. That is an error that I apologise for. That has been removed on the earlier pages, and it's just for some reason not been withdrawn on those pages. So I can confirm that pages 32 to 46 are and should be discussed in the public domain. And I'd like to again thank Councillor Wilson for drawing that to my attention. Sorry, I should have said, and I'm not sure whether the company also wants to put any comments in terms of introducing the report, or maybe I've just stolen your next line.
I think there's just some formal stuff to get through, and then maybe we'll pull you in at that point. I just want to say here that there are a number of confidential appendices, which I'm sure the subcommittee will wish to discuss, meaning that we'll need to go into confidential session. However, before we go into confidential session, I would like to discuss as much of this report in public as possible and take the vote in public, which will mean that there's a short break to enable the stream to be restarted, the video stream. So members, we will now move to the debate on the non-confidential part of the report, but we will start with comments from This Land. And thank you again very much for coming.
Thank you. Thank you, Michael. Thank you, Chair. Just from my point of view, obviously, I was appointed by this subcommittee on the 17th of June, so pretty new in post, but very much getting my feet under the table. Since that appointment, myself and other board members have extensively reviewed and challenged the business plan, draft versions and the version that you have in your pack today. As a board, we've focused quite firmly on good governance. We've also tried to focus on the shareholders' objectives and aligning the business plan with the council's ambitions and what it is that the council seek from this business to achieve. We've also focused on how we will deliver performance monitoring and accountability from both the executive team and from the staff of the company, and also focusing on the relationship with the shareholder. So making sure that we have already scheduled regular meetings, in addition to making sure within our board monitoring and scheduling that we're factoring in these particular subcommittees, but also one-to-ones and various catch-ups with the shareholder as well, to make sure that we're all on the same page and that we're following some good KPIs and monitoring. On that basis, I'll hand over to Rob to give a little bit more detailed information.
Thank you, Barbara. Thank you, Michael, Chair. Yeah, I've been in post a little bit longer than Barbara, but not much longer. And my focus has been very much about delivering a business plan to you today that is acceptable. I will say that having arrived at the business 3 months ago, I found a team that were working incredibly hard and collaboratively with your team, the shareholder, to maintain momentum in the business. And it was great to see that the shareholder clearly wanted to find a sustainable long-term solution for the business, which is great. So we've centered the business plan very much around delivering on those shareholders' aspirations of low risk, deliverability, and really trying to maximize what we can do with our existing asset base in the short term. So that's how we've developed the plan, but we've done that very much through the lens of we have obligations to you, the shareholder, under a loan agreement. And we have to meet those obligations going forward. So we have to deliver on the loan repayments by the stated dates. We have to deliver the accrued and the future interest payments. So the plan, we believe, does that. And it does it without taking on any new development sites or development agreements. So it's very much, in my view, a continuity plan at the moment, which is about delivering 3 key objectives. And I think it does deliver those objectives. The first is it takes our existing asset base, maximizes the value, and uses the cash flow from that to deliver on our longer term obligations to you on the loan and the interest accrued and due, or in future interest, which we have to pay down. Secondly, it implements a improved structure of monitoring, reporting, and governance across the business, which is very much aimed at maintaining shareholder confidence and improving that confidence. And thirdly, it sets a framework for us to undertake a strategic review of the business to consider its future purpose and strategic direction. And that's something that we're planning to start fairly shortly. So Michael alluded to it as well, not having put the plan together, and we've come up with a forecast as a result of that. We've then looked at the inherent risk that exists in the real estate sector and how that might manifest itself on that plan, alongside the potentials for opportunity for improvement and mitigation. And we've scenario tested that to arrive at a range of outcomes for the plan. So I think that gives us what we believe is a robust plan. It's been scenario tested, and it's also had the benefit of external scrutiny from Grant Thornton, which I think makes it, or confirms in my mind, that it is both a viable and a deliverable plan, which we put before you today. Thank you.
Okay, thank you very much. Right, so anyone got any questions? Councillor Wilson.
Thank you, Chair. I have quite a few questions. If I just give them all, then is that sensible? And then this land or Michael can answer them all at once.
It depends. Are they sort of interrelated, or are they kind of?
They're all related to the business plan.
Well, yes.
In that's the item we're talking about.
I think probably it's helpful just to go by one, and we'll stick with you until you've finished. Okay.
Let's see how we go. I
Yeah.
apologize. It might take a bit longer then. You just talked, Rob, about reviewing imminently the future direction. So I just wanted to clarify on page 27, that's the strategic review that is to be done shortly, and whether you've got any current plans for that. Related to that, I guess, is the risks and opportunities. And although there's a lot of detail provided in Appendix 2, which is not part of the public session, is there anything that you can identify now that we can discuss and debate in public?
Thank you. To the first point, the strategic review, my number, I've got the business plan, so my numbering will be different to yours, I'm afraid. But yes, we have started to consider how that strategic review will be taken forward, and we're starting to scope out the advisors that we would like to bring into that review across the real estate sector, both financial, analytical, agents and specialists. So we've started to look at that, but that's as far as we've gone. We really wanted to get the business plan accepted, and then we move into that sphere of that strategic review, which we're hoping to conclude by ideally November. To your point on risk, I'll just remind myself of the risk register that's in here. I mean, we've got some fairly generic stuff in the opportunity side, which is improved disposal values, which are all related to the market. I think in the risk side of it, they're all very specific to projects, and I don't know, is that something you want to draw out now, or would you rather leave that for confidential session?
I think possibly unless there's a thing that you can talk about without specifying what the risk is per project. I don't know.
I think you'll be able to comment and help. Robert, if it's helpful, I think Councillor Wilson, when we look at the generic issues, we draw down into a site-by-site analysis across a number of themes, one of delivery, one of market change, and that could be in terms of cost or value, and linking that then is in terms of the optimism bias that sits behind that. And each site has its unique nature given its unique positioning. And so what the confidential appendices do is draw out those thematics to the site by site. It would be wrong to talk about those site by site in the public arena, but as part of the sensitivity analysis, what we've done is we've looked at those thematics and challenged, what if this happened 2 months later? What if this happens at a higher price? What if this happens at a lower sale value? What if all of that happens? What does that do in terms of the cash flow and the security? So that's the kind of risk. We've also, as Rob just alluded to there, looked at the opportunistic side. What if this factor changes and therefore we can get a higher value to the market price? What would that do in terms of the cash flow and the repayment of interest or earlier loan repayment? What would that do in terms of de-risking the business? And again, that's set out on a site-by-site analysis, and happy in the confidential session to really drill down into that. And I would say and echo the points in terms of the strategic review. It would be remiss of the council to provide no direction or listen to its company about the long-term support, having engendered a position of strong cash flow, to not then address the situation of, well, what next? Without any commitment to what next is, that will be part of the business planning process that happens on an annual cycle that will come to this committee at least by February 2026. And it's right and proper that the shareholder working with the company explores those options. So as Rob just alluded to, that is the next step from today. But for today, it is purely as the direction of the February committee: deliver, repay.
Further questions?
Well, related to that answer, February 26 is only 6 months or so away. In a way, what we're being asked is to note, is it the current business plan as appearing to be acceptable, but recognize that the company needs to do its own review of the market and all the other opportunities and risks, and then come back to us with more detail and include within that its assessment of what the long-term arrangements might be. Is that a fair assumption?
Pretty much. I would just clarify it: scrutinise and approve, or not approve, as the case may be, and then note this as the baseline on which to scrutinise future monitoring. But there is at C&D a number of parcels of land for consideration, having scrutinised that, which are critical to the delivery of the business plan. And yes, then come forward in February with the next iteration, as is set out in the shareholder agreement.
Great. Anyone else? Councillor Bywater.
Yes, thank you very much. And before I start, I think it's I should put it on record to Michael and the team for the briefings we've had prior to this. I'm subbing here, so it's a new environment for me to learn from. But I do come from a bit of a business background, so looking at any business plan, there are always risks and opportunities within any business plan. Is this the best it could be? Probably not. But is it the best in the circumstances? Yes, it probably is. But what I also welcome is the overall scrutiny. I've been a councillor on this council for many, many years, and this level of scrutiny for this land has not been existent really. I think it's been found wanting, and I think this is an opportunity to really get a grip of this and really push it forward, so that it does perform how we want it to perform. I'm not going to talk about the finances and the confidential stuff. I'm just going to sort of be high level. But one point that really grabbed my attention was on page 13, it talks to the sum of £119.8 million in loans. And yet in page 26, the background, it talks about a loan of 133 million. And I'm just a bit confused about those figures, really, just high level figures. So if someone could explain that to me. But I also believe, this is hugely optimistic when we look at the headlines in relation to the timelines for some of these projects. I think, I've seen huge sites within my own ward take a lot longer to deliver than what was originally planned. And I think, are we being optimistic, or this land being optimistic in those timelines? And then if you factor in LGR, LGR is coming over the horizon, and how is this going to knit into LGR, and how is it going to be monitored and factored in? Because ultimately we're talking about assets, loans, repayment programs. Where's that going to sit? How's that going to sit? Because for me, that is a big risk for everybody in Cambridgeshire. So I'd like a little bit of understanding on how that's going to work as well, really. But I've got some other questions on risk, but I'll leave it there for the moment. Thank you.
Thank you. Michael?
Thank you, Chair. Perhaps if I kick off, I might invite the company then to come back on the optimism point. So just for clarity, it's a very good point picked up by Councillor Bywater at the start. The 126 is made up of 119 outstanding loan plus the nearly £6 million of equity. There was a £13 million loan to the company as part of its startup that has been repaid. So that 133 to 120, I'm rounding for that purposes. That's the difference, but that's why you see the different figures. In terms of LGR, I don't want to say that's what Tom and I do at the weekend. Obviously, that does have to be fit in with the day job. But from the perspective of the pure process and governance, it will be just as we look at the joint venture of some of our district and city council in relation to that. It will be something that will be transferred upon vesting to the appropriate body that will take over from that. I myself have had 2 meetings on this within the officer corps in terms of sharing and starting to share information. But in a pure simple terms, whatever organisation then exists will take on all the responsibility, any of the covenants, the decision-making process. So we will certainly, as time progresses and we're clearer on what the position is, have those conversations with the shadow authority. And make sure that position, both in terms of the governance and the monitoring, is carried forward into that appropriate body, and that's where that will sit. But I'll hand over to Rob in terms of the optimism, noting my earlier comments in terms of what we've been looking at.
Yeah, thanks, Michael. With our focus being on the existing asset base only, were we to be looking to bring in new sites, I would totally agree with you. There's an awful lot of risk inherent in acquiring sites, going through a create phase, and then going through planning and securing consent. With the existing asset base, as we sit here now, we've got consent on every site. One of them has been we have a resolution to grant, so we have to finalise a Section 106 agreement on that for the consent to be issued. But that is, I'm told, very close. So there are only 2 new consents we need to secure, which are parts of site. Oh, sorry, I'm wrong. One of the sites isn't a part of a site; that is a site on its own. But the other one is a part of a master developer site. So there are only 2 consents we need to secure. We've been through pre-app on both of those, and we're almost at a point where we're ready to put those in. And we've generally, I think the statutory timetable is 4 months. The reality we've built into these timelines is 12 months because of the reality of getting things through planning consent. But it is only those 2 sites, and they are not sites that contribute a significant amount of positive cash flow to the as a proportion of the overall business plan. The sites which secure the most cash flow have got consent, and I think from memory, 20% of the cash flow is actually in sites which not only have we got consent, but we've got deals done, and they're either signed or they're about to be signed. So we've built in some time into our forecast for delays due to planning, but that's limited because we're not beholden to planning on the majority of the sites. Does that help?
Go ahead.
So a question I guess that a lot of people are wanting to know is, are you likely to seek further loans from the council, is one of my questions really.
The business plan as set out and considered and tested for risk does not require further loans. It maintains a positive cash flow, and it has some contingency in the timing of the repayments as well to give us some comfort. Were a disposal sale to slide a few months, we can still work within those cash flow parameters. And I think that's something that's been tested at some length by Grant Thornton in their review.
Go ahead, Michael.
And just to echo, and I wanted Rob to answer first the way the question was posed. Will you be seeking? I can confirm, the direction from the February subcommittee, as echoed through the business plan that's presented, is there will be no further funding from the council. I will, though, go on record just to say, we have all lived through a pandemic and a global economic crisis that followed as a result of that. So there could always be circumstances where it is in the best interest, but we have a very, very clear steer, no further loans, and we have a business plan presented to you of no further loans.
Councillor Bywater, any further questions?
Carry on if you want.
Go ahead, yeah.
Yeah, so, this land's been through a bit of a rough time. There's been lots of stuff written in the papers and, whether you believe some of it or not. I think one of the questions I always like to ask is about the team. You're both relatively new in post. What's the morale like within the team? And, how's it feel? You're leading the organisation. How does it feel to you?
It's a really good question, Councillor Bywater. I mean, the team have been through a really challenging period through last year and early this year, where there were a number of rounds of redundancies, and they've been very resilient through it. They are continuing to deliver, and I'm fortunate that the 2 key team members on the SMT understand that there is a positive outlook for this land if we get this right, and that they want to be part of that. So I think that's really important, and they're bringing their teams along that journey. But I won't deny it. It's a challenge. We've lost a couple of team members in the last 3 months, as the wider residential market is coming, well, is it coming out of its cautious optimism phase? I'm not sure, but the market is waiting, desperate to go. The Building Safety Act's not helping it, but there will be a push for people when that happens, and we have to make sure we can retain ours. But I think this business plan and the fact that we're going to undertake the strategic review is being seen positively. And that's how we're certainly promoting it. And that, look, there is the potential for a really strong future here if we get this right.
Anyone else? Any questions? Councillor Hathon.
Thank you. So in terms of the recommendations, I absolutely 100% support the recommendation of quarterly reviews. And I think that's something that we haven't seen previously, and being able to come back and challenge this land on a quarterly basis is going to be absolutely transformational in terms of everyone's relationship, because we will all know we're on the same page. And I think that's, or being able to challenge what we get back, I think that's a really important, significant progress. So yeah, I've got a question that's quite similar to Councillor Bywater's. There's a fair degree of history in the papers, and I think this land has gone through a number of phases. When the loan was originally taken out, the financials were completely skewed against it. So it was, you know, the modus operandi, just make money, just develop and make money. And it's never been very clear what is wanted. The council has never been very clear what it wants from this land. Does it want it to be bigger so it can make more money? What does it want? Does it want it to be more, to build more sustainable housing? An extraordinary amount of work and focus has gone on over the last 2 years to identify exactly what we want, to make sure that the business plan today is absolutely nailed down. And Michael Hudson's very clear, it's about delivering and repaying. And I think it is probably helpful that it was unhelpful perhaps that previous presentations were from people who'd been on this land for a long period of time, and that you are new and fresh, I think is actually extremely helpful. Not everyone in the company is in that position. Is everyone in the company aware of, now there is a very clear focus and there is a very clear steer from the county council what is wanted of this land? Has that kind of cultural change, is that completely understood by the company?
Thank you, Councillor Hathon. Yeah, so we've been doing some work with a consultant who I've used in another business, who is a change consultant and culture, supports culture. So when we developed the business plan, and we took that to our board on the 10th of June, and a few days after that we held our first workshop. We've held 2 workshops with the team now. That first workshop, we presented as a senior leadership team to the entire team exactly where we were heading, and what we were planning, and also, really importantly, the direction given to us by the shareholder, and the fact that both the board and the shareholder were on the same page. And I think that went down very well with the team, because, and I can't speak for predecessors, what happened before, but I felt like the team, the feedback has been that for perhaps the last 12 months, they've not been quite sure what the ask is of the business and the direction of the business. And I think that was the first step. It's, we're not there yet, but it was the first step to getting the team aligned and giving them some hope, which I think is super important.
Can I just add as well, obviously relatively new to the board, and we have 3 new board members, in terms of looking at this business plan and kind of, challenging it in detail. One of the key elements for us is to make sure that there is a real golden thread all the way through, from what the shareholder is asking, what the objectives of the business are, and how those strategic objectives flow through to a delivery plan for the senior leadership team and for all of the staff, so that everybody in the team understands what part of their role they are playing and what that is doing in relation to the delivery and the performance that's required. So having really, really key performance indicators for all members of the team as they flow through, I think will be really important to reassure the team and to give them some focus and direction. So having a business plan that is about continuity, looking at what we're doing, reassurance, delivering what's required, and all of the team understanding that and having that approved by the shareholder will be very reassuring from them, having spent the day with them today.
Go ahead.
And my second question is the sort of local member question. So I cycle past Kendall Court every day, and I think many of us in that position would look at it and think, that's interesting. There's a brownfield site literally over the road trying to do the same thing, which has been for sale for absolutely ages. This was a bit of land. This was a purchase that wasn't county council land. So the new proposal is that if any new land acquisitions were proposed, which currently isn't the conversation, but they would come in those quarterly meetings, so the county council wouldn't suddenly find itself with what people cycling past think, why on earth have you bought that?
Yes, that's my understanding, absolutely. The business plan at the moment does not propose any. We are not looking at any. And to Councillor Wilson's earlier comment, I think, what I describe it as, that's why I describe it as a continuity plan. It's a plan to get us from here to the next business plan. This is late for the annual business plan. The next one would be due spring next year. And the one spring next year is what I would call a proper business plan, which is looking at the forward trajectory, the business growth, where we're going. This plan is very much about deal with what we have, maximize that, and take the time to work out what the best future for this business can be, so the next business plan is as good as it can be.
Go ahead.
Thank you, Chair. If I can also draw councillors' attention to paragraph 3.9 of the officer's covering report on page 19 of the pack. It reaffirms that there are no new sites planned within the business plan. There could be an overwhelming business case. I'm not ruling that out, and why wouldn't we want to look at it? But to be really clear, it would be brought to this shareholder subcommittee for decision making. It would not be any other under any other route.
Okay, any questions from anyone else? Councillor Wilson.
Can I ask a specific one about the environmental focus, which, Rob, I think is on page 9 of your business plan and page 31 of our pack? Clearly, the environmental focus has to meet as a minimum local plan requirements. But from a cost point of view, if you have to meet all these extra requirements, does that add on costs to the homes that people buy, or are you able to sell them at a lower price? People are actually going to look on these very favourably. And that's, I'm sorry, Rob. and I'm told that one of them, like the biodiversity net gain, is not as high a requirement as the county council tries to achieve on its own work. So do you have any comments on that generally, please? Thank you.
Thank you, and thanks for directing me to the page number in the business plan. That's helpful. I'll take the last one, the biodiversity net gain. The target is to exceed the statutory requirement by 5%. The statutory requirement is 10%. So we're shooting, it's not strictly mathematically correct, we're shooting for 15%, not 5% of 10%, 10.5. I'm not sure what the council's requirement is, but I think it's just the statutory requirement of 10% BNG. Yeah, so we're actually shooting for 15, 5% above the 10. To your first question, there is an impact to these measures, clearly, but the majority of the measures we're building in are commensurate with the market and where the market is going generally, because all the volume house builders are in the same place. They're all trying to improve their ESG and their sustainability. What we have done recently is we've changed to a focus on fabric first, which is about making sure that the design of the buildings is trying to design out carbon rather than trying to reduce the amount of carbon they use. So, for example, to reduce the energy they need rather than making the energy that they use green. Because if you're using less, then that's a positive before start. I think the danger comes when you try and do too much, because you can always do more. And that's where viability comes into play. And we've got to be very sensitive to that, because we are in a commercial market. We've got to sell houses alongside other people. So I think it's about delivering high quality product, which will set itself apart through the quality and the design, which will add value, and ensuring that we maximize our ESG credentials, but ensuring that viability is still maintained at all times, so that the council, as the shareholder, is getting a good return on the work we're doing.
Any further questions? Okay, well then I've got a couple myself. For me, the biggest risk in this, and I think someone said it earlier as well, I mean, there's always risk in any business venture, but for me, is the market risk. And, Cambridge itself is quite a vibrant part of the United Kingdom, but I think the economy isn't in the best place possible, shall we say. So I'd really like your views on where you see the market in the next few years for the housing market and how that's going to affect us.
I'll pick up first and then Rob can dive in. So I think in terms of the schemes going forward, most of our developments have got somewhere between 30 and 40% affordable housing on each site, depending on the sites. So obviously in terms of housing need and demand, that's hugely important locally for the area, and obviously means that you are pre-selling at least 30 to 40% of your homes anyway, because you are working in partnership with a registered provider who's going to buy those homes for you. So for most developers, that helps de-risk the site potentially to a percentage. I think the benefit here is that housing is still selling very well, and the market correction or difficulty in the market is more around apartments and flatted developments. So I think where there are any sites where you've got a large proportion of flatted developments, that's where you have a greater risk of market downturn and obviously of a very slow sales rate. I think what we have to do when we look at these sites in detail is actually plot out best and worst sales rate, best and worst sales values, and that scenario testing is what's really important to do that, so that we can look at what happens if they sell for 10% less than we'd originally appraised, or 10% more, or the sales rate is slower. There is a theory sometimes that if the price is lower, the sales rate is quicker. That's not always the case. Sometimes it just depends on the demand in the area. Having the right research and having the right input into the design of the properties and what's required and what the market wants is fundamental to getting that right. So having external input for that, I think, is important. And I'll hand over to Rob because he's probably more involved in that side of it.
Thanks, Barbara. Well, the thing I would add to that is really that, yes, the wider market is obviously, a big risk. And if we were to have an economic downturn because of, an escalation on the global stage or something, that's a significant risk for any developer. The risk around sales rates is obviously important, but if you look at our cash flows, our net cash flows, and I'm estimating here, but I think it's probably no more than 25% of that comes from the sale of properties. The majority is land, as in our guys as master developer. Now, whilst that is still affected by the market, because if house builders aren't selling, they won't be buying. But we're also in a world where a lot of the house builders, because of COVID, the post-COVID price inflation issues, and the subsequent issues, mini budget, etc., they have not actually restocked their land banks fully for many years. And in my last role, I mean, we were talking to all the major house builders, and some of them were literally looking at cliff edges on their land banks. They are desperate for land, but they have to balance up when they're going to release capital to go and acquire that land. But they know they have to go and get it, and that is one of the benefits that I see for this business, is trading into a growing market. And also, as Barbara mentioned about affordable there, a lot of the house builders have moved towards partnership models, which is bringing in build to rent and RPs. So for those house builders, when they're making commitments to build to rent operators, they've got to deliver those houses, and that they're not at the best of the sales market. You know, the rental is growing when residential sales are dropping. So those businesses are actually still having to deliver units. They're just not necessarily all going to private for sale. They're going to BTR and they're going to residential providers, registered providers. So the businesses still need the land, and that's 3/4 of our cash flow is selling land to those businesses with the right consent and serviced. And that's where, you know, there's a great opportunity for us, but I think it hedges us a bit from that private sales market as well.
Oh, that's very interesting. Thank you. So the next question is, so we've prioritized the sales for cash. I wonder if you can just and making sure that the loans are repaid. I wonder if you can just talk about how you've done that and what your priorities have been.
Well, I mean, to be honest, the existing asset base was already there, and the shareholder and the team had been working through it since the beginning of the year. So when I came in, we were looking at, you know, decisions around, do we buy, do we sell? So not buy, sell. Do we develop or do we sell? And really, a lot of those decisions had already been made to an extent because they were the right decisions, and the team had already identified sites where we had added as much value as we could, and to hold them on our balance sheet and try and develop them was not going to be sufficiently accretive to value that it was worth doing. So much better to turn them into cash, which give us a better cash position and puts us in a place where we can make sure that when the loan repayment dates come up, we can repay them. That gives us the headroom from a cash and a repayment perspective to then look at some of the bigger sites and say, well, actually, we can add value by developing that. So that's the decision Ediva is a great example. It's fabulous sites. And, you know, we would want to develop that because it's a profitable site for us. We wouldn't want to need to sell it. And we don't need to sell it because we've created sufficient cash headroom that the business is safe and a going concern and viable, and can deliver that out and take the profit that comes with it.
Okay, thank you. And so, I mean, this land is a commercial company, but you are owned by a public sector organization. I wonder, can you perhaps talk about whether that's been a disadvantage to you? Are there things that have cost you money because you are owned by a public sector organization? How does that play out?
Well, clearly, Barbara and I are new to the business. It's very difficult to answer that fully, but anecdotally, I think the feedback over the last couple of years that the team have felt that decision making has been slowed between both the company and the shareholder, and they haven't been as aligned as they could have been, and certain deals have not happened as a result of that. And you know, they still mention those and say, well, you know, we don't want that again, sort of thing. But also they said, well, you know, there was an element, I suppose late last year or this year, where they were struggling. Agents weren't really engaging with us. Buyers weren't really engaging with us. We're seeing that changing. It's clear that as we're coming to the market with a portfolio of assets, buyers are there, and we're getting, you know, one of the biggest sites. We've got 5 or 6 of the national house builders now putting in requests for information about that site to work up bids. So I think there's definitely been a shift, but historically, anecdotally, I believe that perhaps the decision making has been slowed down. That has had some impact, but I'm certainly not seeing that now in the relationship we have with yourselves.
I mean, I echo Councillor Hathorn's comments about the benefits of this regular review and the monitoring that's going to be that has been set up. I think it's great. But and I was wondering more about along the lines of, are we expecting more of you in terms of biodiversity net gain, environmental standards? Has that had an effect on your profitability?
I don't think so. Again, I can't speak for specifics, but that hasn't been mentioned to me. And from what I've seen of the requirements put on the company, I don't think they've been onerous. So I don't think it has, but I can't say for sure, I'm afraid.
I think from my point of view as a member of the board, being a wholly owned subsidiary of a local authority, it's really important that whatever we do is to the benefit of that local authority. Now, that could be monetary, physical, financial benefit. It could be social value. It could be biodiversity. It could be ESG, whatever that could be. So if the shareholder has a view that they have a focus on some certain areas and we can deliver that and be viable whilst doing it, then I see that as a huge benefit. And there's no point in a local authority having a commercial arm if it's not going to give them more than just financial benefit. I think it has to do both.
Okay, thank you. And then sort of looking at the business case generally, can you talk about contingency? So what's been built into the plan? What happens if things go wrong? What are the levers we can pull? Is there a sort of buffer in the numbers? Yeah, please.
Yes. So in terms of contingency, the appraisals for the individual projects, without getting into detail, all have their own consideration of risk, and they have contingency sums built into them. So that's a first level protection against changing the market, sales rates, whatever it may be, or cost increases. The contingency generally in terms of levers that we have, those levers are really around maintaining and managing our cash flow. So, if we have a site that is delayed by planning, we can delay capital expenditure. We can delay all our outlays to match that. So what it does is it should give us a net position that moves to the right, but it's still a net position. Within the current business plan, we've factored in the loan repayments to actually target ahead of the due dates, again, to try and build in some contingency. So, if we can hit that, it's utopia. But if there is some slippage, we're not in a world where we've got to come to you and say, sorry, we can't pay by the due date. We've tried to build that in. So there's contingency in the overall level of net proceeds, if you like, built in through the projects. And there's contingency in the cash flow and the business performance for delivering on its obligations to you built in through the forecast.
I just echo those comments and draw councillors' attention to page 18 of the pack and paragraph 3.6, where we've drawn that out for councillors in terms of our view, substantiates that.
How do you feel about it? You're very new. You've come with sort of fresh eyes. I'd love to hear your views on where we are.
Thank you. Yeah, very new, not young, but very new. Fresh eyes. Look, the first thing that sort of struck me is we're a business that deals in land and development, and we are on the cusp, it feels like, of growth in the residential sector. Government is trying to unlock some of the supply side blockages, such as planning. Building Safety Act has still been a challenge, but it doesn't impact us, fortunately, because we don't build high risk buildings. The planning improvements will have an impact, but they're slow to come through. The demand side incentive, historically, Help to Buy, etc., they've gone. There's talk about new demand side incentives, but we're not seeing anything yet. If all of that moves forward as the government hopes, and we see that growth in residential construction, then for a business that deals in land primarily, we should be in a fantastic position, because as the old adage goes, it's the one resource nobody's making any more of. So we should be very pleased to be sat here as a business that can bring land to market, and to a market that's quite frankly going to be desperate for it. So I think there's a great opportunity here. I really do. And I think it's about taking this time now to pause and reflect and think about the future purpose and strategic direction of the business, which I suspect has never happened before, because there's always been something. There's always something. There's no time to stop and think. People carry on. I think we've got that opportunity now, and we've got to seize that and make this the best it can be, so that as we go into what we hope will be a significantly growing residential market in the next 12 months, we're right in the heart of it, and we're benefiting from it to the maximum. So yeah, I think it's a great opportunity. It's a great time to be where we are. It's about getting it right now, and delivering really well.
Thank you. Councillor Hathorn.
So earlier in the year, the shareholder subcommittee made decided, and it was an extraordinarily difficult decision to, or an extraordinarily well scrutinised and thought through decision to restructure the loan. I think, bearing in mind on today's business plan, that was a very sensible approach. It hasn't affected delivery of council services, because it was about future money, which I won't speculate. Do you think you could have delivered? I mean, this is a very tight business plan, which is absolutely prepared to have a lot of scrutiny ongoingly. Do you think you could have delivered a business plan that could have met a significantly larger loan and the interest repayments that came with that? Do you think, is that something that could have happened, or was that just, yeah, sorry.
The only way to do that is to put more asset into the business. And yes, I think, as I said, the market, I'm convinced the market is there. And I think as a land business, trading into a growing market now is a fantastic time. And again, I reiterate, I've spent the last 5 years as a master developer selling land largely to volume house builders. And they've been screaming at me in some areas that they're so desperate, they're just desperate. They're looking at a cliff edge in their land bank. So I think we're in a great position. So were we in a world where the council was confident to release more land, and the right land to the business, then we could go forward and we could come up with a different business plan. But with the assets we've got and the cash constraints we have, we couldn't go to the market to start buying land to do that. And with the assets we've got, we can only do so much. So whilst this business plan, as I call it, is a continuity plan, it's almost a hold for 6 months plan. I'd like to think the next plan is going to be right, here's our opportunity. If we grasp this, this is where we can generate significant further returns.
I think to add to that as well, as the board, we need to make sure that we are transparent and we're giving our shareholder assurance that the interest is going to be repaid, because that interest is being used for key services. And for me, that's point number one. So we need that time to demonstrate we can do that before we then say, well, whilst we have clearly some skills, some staff that can deliver more for the local authority, we need to gain your trust and prove to you that they can do that, and they can do that in a way that is conducive to you and financially beneficial to you. So for me, the focus is definitely repaying more of those loans, giving the reassurance, building the trust, being accountable, meeting with this subcommittee more frequently to be able to do that.
Thank you. Any further questions for this public session? Okay, so it's now time to move to discussion of the confidential appendices. I propose to resolve that the press and public be excluded from the meeting on the grounds that the agenda contains exempt information under paragraph 3 of Schedule 12A of the Local Government Act 1972, as amended, and it would not be in the public interest for this information to be disclosed, as it refers to information relating to the financial or business affairs of any particular person, including the authority holding that information. Do I have a seconder? Thank you, Councillor Hathorn. Can we vote? I think we're agreed, unanimous, thank you. So now we move to the debate. Oh, wait, yeah. Oh, okay, yeah, let's have a 5-minute break, yeah. Sorry. That's all right.